Welcome to the Mentor Studio, where today's thought leaders and leading entrepreneurs inspire and bring real-world ideas that help you take your career to levels you've only dreamed of. Now buckle in. Here's your host, Michael Silvers.
Hi, everyone. This is Michael Silvers. I wanted to welcome you all to the Mentor Studio. I'm so glad you're on. You like my virtual background, and since it's a podcast, you can't see it. Just know it's a beach with sunshine, and life is great. I know there's a lot going on in the world, and for those of you who listen to this 2 years from now, you'll think, wow, I remember when. So I'm going to say is take care of yourself, be safe, lots of love to everyone out there, and there was a famous from a Frasier episode, a comedy way back when, because remember one of the podcasts, I had Ken Levine, one of the main writers for Frasier, and so Frasier got mad. He was doing an interview, and the person had the delay and couldn't handle the delay, so he said, people, turn your radios off. Well, I'm not going to say go ahead and turn your podcast off. But again, when you listen to them safely. When you're driving a car, make sure you're still focused on where you're driving. And in today's world, with what's going on right now, podcasting is where you should be, but I won't say anything else. And turn your TVs off, though. And if you're watching TV, go ahead, watch an old Frasier, watch an old show, watch a Friends, watch Big Bang Theory, whatever it is. Put some comedy into your life and stop watching the constant feed of the negativity. We'll be through this as usual. Our parents lived through, some of our parents, now some of you are a lot younger, lived through World War II, went through the Korean War, the nuclear crisis. There's been other pandemics around the world. We haven't been hit as hard, and so we say our prayers for them that have already gone through this. And just know, do the best you can. Love the providers out there. Love the nurses, the doctors, the police, the firemen, everybody out there who's helping the world right now, and everybody's essential. It makes a big difference. So again, it's about the mindset, and there's a lot of fear around finances. There's a lot of fear around really what's going on right now. And do I even move? If I lost my job, is it time for me to educate and learn? What do I do from that front? Am I ever going to put my money back in the market? Am I ever going to invest? Am I ever going to be able to do that? And even if I make money to do that? And again, it's having that mindset moving forward. You got to sort of change your mindset in your own life. And that's why you listen to all these podcasts and all these virtual shows that are going on right now. Again, there's people I work with. I think there's 7 shows going on right now virtually, and it's big time for that. So with that, I want to introduce the 2 brilliant gentlemen on right now. And again, we're pretty lax here. So we got Kelly and Randy. How's that? And you'll know more about them. But I'm going to tell you a little bit about them, and this is just sort of a snapshot. I think, did I do the right? Okay, got one there. Okay, I got them both. All right. So Randy was the CEO and co-founder for iFlip, consumer software expert, former VP at Infusionsoft, which we use a ton of when I was with our Becker. School teacher turned entrepreneur turned corporate executive. We're about to give him a thunderous round of applause. And Kelly's co-founder, CTO of iFlip, 35-year Wall Street veteran, former risk manager from Deutsche Bank, Solomon Brothers, and Brevin Howard in London. Fantastic. Advanced degrees in mathematics, statistics, and finance, which means if you really started talking, I wouldn't get it, but I put my uncle on the phone. So without any further ado, if they turn their cameras on, let's give a big round of applause for Kelly and Randy.
All right, I didn't know we were going to be on video, but
I love it. No, you're at a live studio. We're all at live studios. I just got a virtual background on. Everybody, I want to see you. I don't care as long as you're dressed. See, if you're not wearing pants, don't worry about it. Remember, you don't have to be seen. It's okay. There you go.
That's a podcast, so I wasn't prepared for the dress.
Oh, wait till we broadcast this thing on Roku, but life is good. Go ahead.
Thanks, Michael. Appreciate it. We're both really happy to be here. When I know the times have changed since we scheduled this call, and so we've altered the topic a little bit in order to address what's going on, yet still give us something that will be relevant for your library, months and months down the road. So, I'm going to start out, and then I'm going to introduce Kelly formally and let him talk as well, and just talk a little bit about the times. You've already said it. We may not have been hit as hard as everybody else, but to many people, this is the first biggest catastrophe or perceived catastrophe, if you watch the news, that we've ever seen. And so the world is in a state of negativity. Problems. One of the things I've been talking about a lot lately on a lot of these shows is that when big problems like this come and they create a ripple effect, this doesn't just create a problem with the folks with the virus. This is a problem for the folks that work in restaurants. This is a problem for the folks that work in retail. This is a problem for the folks that do just about anything. And so when we look at that, I've heard a couple of people, different people coin this recently in the last couple of weeks. We're entering a whole new age of entrepreneurs because there's big problems. There's some big problems going on, and the solutions aren't going to come from the government. They're not going to come probably from big corporate. What's going to happen is people are going to start figuring stuff out. They're going to move things around, and things will, you've heard this on every news station, be different going forward. And so we take that approach in everything that we do, and we look at this, though we're extremely sorry and we don't wish bad on anybody ever for anything. We're trying to see the good and the opportunities in what we can do from an industry perspective. And so as we do that, for most of you guys that don't know, my background is school teacher turned entrepreneur turned corporate executive. I was a school teacher for the first 10 years of my career. Then moved into the entrepreneur space, educating, training, and teaching small business owners. And I've been all over the world. I've coached thousands of companies in language, leadership, mindset. And then I became vice president at a company called Infusionsoft, many of you know it, and ran their small business education division in that company. And now the CEO and one of the co-founders with my partner, Kelly, at iFlip. And iFlip is a simple software company that's changing the way the world does finance. And we're not going to spend a ton of time talking about iFlip on here. It's just important that you know that everything we're talking about, we're doing. We're not just talking heads telling you about some cool things. We're actually doing the things we're telling you about. And so when we look at the world of finance and the stock market, and we see what's going on, my partner here, Kelly Korshak, is a renowned expert in this particular arena. He went to Stanford University's physics program when he was 16 years old. He hates it when I say that. He gets called shucks. He's managed billions and billions and billions of dollars, literally at any one time, managing the risk desk at a little bank called Deutsche Bank, places like Salomon Brothers and Tudor Jones. And he does it through the use of mathematics. And I'm going to treat this conversation over the next 40 minutes or so as letting him talk a little bit about the thing he's an expert in and how it correlates to the world today. And, he'll sprinkle in how we're doing it and how we're avoiding some of these problems. But the idea here is for you guys to really understand that the media is driving the world with fear right now. And it's not necessarily a time to be allowing fear to drive our decisions, particularly around the stock market. So Kelly, thanks I invited him at the last minute because we sort of switched topics around here, but take a minute, Kelly, and tell us what just happened in the stock market and why you would call it a crash. I've heard you call it that, number one. And number two, explain to this group the difference in this particular event happening and creating the results it's created inside the stock market. And compare it to like a 9/11 or to a 2007 and 8 financial crisis, or even an 87, flash crash type of thing. What's unique about this particular happening, and how do we get here? And then kind of give us a basic state of the union where you see it at today.
Okay. Well, thanks for having me on the podcast tonight. Oh, wow. That's a lot of questions, but I'm going to boil it down to compare and contrast the current events to historical ones. Before I get into that, as Randy mentioned, I look at things really from a statistical perspective. It's easier for me to do that. Anybody could opine on what is causing any kind of calamity in the world at the end of the day, and the one that we're dealing with as we sit here tonight is one that was caused by a virus. We're all aware of it. One thing is for sure, though, is that when you see these kind of events that are frankly world-changing and certainly fearful, it's not as if they haven't happened before. Before we got on, I was listening to pointed out that my parents didn't. They were baby boomers. Well, actually, right before. They were born during World War II. So they never got to experience a real wartime lifestyle, which is what we're experiencing now. when we have troubles going to a grocery store. But I can say that given my career and what I did, what I see going on today in the markets is unique, and it can be compared to other events, but it is unique in one sense. It's unique that because behind this, what's going on behind the scenes is something where people are locked up in their houses, frightened. And it hits all of us in some way or another. And that has an impact on the markets. That being said, again, it's just another statistical event. It's another event that has caused the markets to decay very rapidly. In that sense, it reminds me of 1987. Obviously, there's many other events. There was Russian ruble, 1998, long-term capital management. Many people probably don't know what that was, but that was an event as well. That was a fear that came out of Russia and the downturn of the ruble. And there was the Gulf War. Right before the Gulf War started, the market crashed as well. It didn't feel like a crash back then, but it was an event that looks a lot like the one we see today. And the thing I notice about it, though, and I think everybody should keep in the back of their mind, is every major catastrophe has been followed by a recovery. How long that recovery takes is another question. I suspect this one, sadly, is not going to occur quite as fast as the pundits might want it to. But that being said, inside of these calamities, sadly, if you're an entrepreneur, there is a lot of opportunity. So there are people, and you could read about them, that have made a great deal of money in the market going down. It's just because they saw what was going on and they were able to capitalize on it. So if I had to compare and contrast this, this reminds me mostly of 1987, where the market fell very quickly, and then it rebounded soon after that, like we have, and then it fell again to a further low in subsequent months. So this seems to be following that, especially on longer term patterns. The statistics work this way, given the recovery periods, whether you're looking at, depending on the data sets you're looking at, which could be monthly or weekly or daily. You can see that this market is frightened, and it needs time to recover. It's not going to be. It is the end of the 12-year bull run for sure, but that doesn't mean that the market won't recover. And now the question is this? And I suspect it will take at least 6 months for the market to recover to all-time highs. Randy? Oh, did I lose you?
No, he's just got to unmute. Randy, I'm going to go ahead and mute yourself.
Sorry about
There
that.
you go. He was just busy fiddling with the keys,
Kelly, when we look at people's, we hear it on the news all the time. The market's down 30+%, big numbers. And people talk in terms of the market being down. And what a lot of people aren't really aware of is that traditionally, since the Great Depression, or since they invented and started creating things like mutual funds, we've all been taught that we diversify our portfolio into things like mutual funds in order to mitigate risk. If we spread it out nice and thin, no one thing can hurt us. Yet those folks are the ones that got the most hurt the last few weeks. Can you talk a little bit about mathematical, algorithmic types of stuff versus diversifying with the intent to manage risk? And I know you've been a risk manager, and you are a half-glass empty guy. I can attest to that. From the risk manager's perspective of a guy that's done this with billions of dollars at a time, why is one better than the other, and why is diversification truly not the best way to reduce risk?
Well, there's a quick short answer is that diversification is something that it is common sense to most people, that if I divide my eggs into many different baskets, if I drop one basket, I won't lose all of my eggs. So it's very intuitive to think like that. However, that is actually the capture point of how Wall Street goes about attracting the money of Main Street into its vehicles so that Wall Street can make money. And obviously I was on the Wall Street side of this, so I understood how collection of account money occurred. I was never involved in it, but I understood that the general rule of thumb of collecting money is to offer something that is so intuitive that it seems axiomatic, like this must be truth. Sadly, that isn't truth. Actually, a diverse portfolio could be obtained by trading one single instrument, including, call it Apple, if you wanted, as long as you had a way of creating many variants of Apple. A variant of Apple could be, well, I could trade options on Apple. I could trade stock futures on Apple. I could trade Apple stock against a bond, for example, and say that that's the Apple spread against interest rates. So you can create different vehicles using one instrument. So we believe, and what I did for a career was to actually create something called derivatives. A derivative is just simply a structure of various sets of instruments that create a behavior that is far more predictable to manage. So on Wall Street, the vehicles could be, you've heard of them, right? From the 2008 financial crash, you heard of CDWs, credit default swaps, things like this that were designed to manage in case the market went down. So many derivatives got created, and that's how some people became very wealthy in the 2008 financial crisis, because they created a vehicle that they knew would respond a certain way. That's what we do, and that's what we do to give our clients a level of investing that is safer than just going to the Edward R. Jones down the street. So that's one aspect of how diversification, although it may seem so intuitive, is really not the best way to manage money and also manage your risk at the same time.
So I wanted you to expand on that just a little bit, because we hear conversations all the time about people making decisions on things to buy or sell inside the stock market, professional people, mind you, based on the news, based on what's going on around the world, things that are happening. They have an opinion about it. They're like, ooh, that, Trump said this, so that must go down or must go up. And we take the stance that, mathematics is much smarter and better than the human, even if we're talking about a fund. So talk a little bit about how we can assert that it's better to base your decisions in mathematics than in opinions.
It's like anything. When you want to make a bet on some direction, it's best to have the odds in your favor. I'll give an example in a second. If someone wants to listen to Jim Cramer on CNBC after work, if you can bear it, Jim Cramer, for example, is a very smart guy, and there's no doubt about that. And he always feels that there's a bull market somewhere. And so recently he pointed out that, hey, you can buy ExxonMobil and get a high dividend. You can buy many different stocks that are defensive in orientation. In other words, trying to create some reason to buy a stock with your money. By the way, with the fewer dollars that you had little more than 3 weeks ago. And so the problem with that, and for all of his genius, and he's one of those talking heads, of course, and he's a very smart one, is that people have lost money, and it doesn't mean that they want to change their investments right now. It's like, well, if I sell this to do what he said, then if the market goes back up, I'm going to miss out on that opportunity. I'm going to be stuck in some dividend stock that may or may not even decide to pay the dividend given what's going on. So I don't go in that direction, because that means you're reacting to an event, and you're reacting after you've been beat up, which means you're probably not going to be able to participate in the next fight as well, because you've been hit over the head with a baseball bat. The other thing to do would be to say, look, statistically, what goes on after things like this? And this is for any entrepreneur. When you go into anything and you make a bet on anything, people that go into, and for example, you start a business. You start that business and you think, I can do this and this and this I know I can have demand and I can make this much money. So I like that thinking, and you need to have this kind of deep belief in being able to, that you can succeed in whatever your attempt to capture wealth and build wealth is. However, my father was an accountant, and I just can't get away from the fact that I also have to measure what is the risk of me being wrong. And let's face it, we all know that many businesses, 95% of most businesses fail. And they fail because of the unforeseen. And they fail because maybe the demand wasn't what they thought. And maybe the cost to build something wasn't what they thought. And maybe it took longer than they thought. It is a host of reasons can make something go bad. The best of ideas, sadly, can fail with the simplest of events. And look at what's happened here. I mean, imagine there's a lot of people that probably just opened up a restaurant. And this is not a great way to start that. Those businesses will likely go out of business. This isn't a good start. It's kind of over before it really began. So the better way, and the way I think it should be done, is you take a look historically at whatever you're trying to do. And in this case, for example, it's the markets. What's happened before when a market has done something like this? So we just experienced the worst first quarter in history in America. It was down 20 some odd percent or so. Let's think about that. 23%, I think. Just think about that. What happened the last time? Well, in 1987, for example, we lost 20% in one day. That was that Black Monday. I remember it actually. And what ended up happening is in the weeks after it, the market actually rebounded. Yeah, that seems to be what's happened here. It was down 33%. Then it moved to be down only 18%. Now the market is falling off over the last 2 days. So in 1987, the market did rebound very quickly within the next following few weeks. And then it made a new low within the next 3 months. The pattern like that seems to be following. Now, keep in mind, though, that other times the markets have fallen like this, that pattern hasn't occurred. So I only see that pattern one time out of, since the 1950s at least, 7 different events that have caused this kind of a move to happen, a 30% drop to happen within a few months span. So, because this has happened before. And so in the other occasions, there's only 7 times this has happened. And 6 of the 7 times, 1987 being one of them, the market sadly did make new lows. So if I was a betting man, I would say I have to, as much as I would like the market to go up and feel that we can recover from all of this, the odds are highly in favor of not being in the market for the short run. There's more to come. There's probably, and we can see it. We all kind of know, and we don't want to look back and say, oh, I should have known it. Of course, more people were going to die. There was going to be food shortages, supply shortages. There might be, there's going to be perhaps problems at grocery stores. We saw them at first, but that could happen again. And when people get afraid, especially in this particular case, there's no knowing. Maybe this market has to correct a great deal more. But bottom line, out of 7 similar events, only one of them had a recovery of any kind of speed. And by the way, 2018 was the one that recovered with speed, which was just literally 2 months ago or 15 months ago.
Randy, I'm going to jump in for 1 sec. Part of what happens too is there's a mindset around this too, because of you have the investors obviously who play the market, have big money in, but you also have those right now that are sitting and thinking, oh, okay, where do I start? Because again, part of this is, all right, we know it's going to go up and down. We know that's the long term, and I want to play the long term. Maybe I just lost my job, but maybe I have $25, $50, $70. Does that mean anything? There's that. Well, then there's so many that never, ever do anything with the market because maybe I only have 150, 200. It doesn't mean anything. And they don't realize the education and everything they're going to learn behind it. And at the same time, even investing that small of an amount gets them over the hump psychologically. So can you both talk a little bit about that more?
Absolutely. That's an excellent point. The way you have to look at these things is we all know that stocks have become a lot cheaper. For example, on our mobile app, you can open up an account and put $50 in, and you could buy with $50 right now, you can buy 4 shares of Carnival Cruise Lines. For example, we have all heard of Carnival Cruise Lines, and the bet would be that you could lose the $48 that it would cost you to buy the 4 shares. But if you do buy those, but the other side of that is Carnival Cruise Lines was $40 a share before all of this happened. So you have a chance of betting and losing $48 if you think Carnival Cruise would go out of business, and you can make obviously 40 times 4, $160 if it succeeds over the coming years to go back to where it was. So, hey, I got a chance to bet $48 and make 200% of my money, or I can lose 100% of my money if you think it'll completely fail, which I don't think that'll happen, but suppose it does. That's a good bet generally. Mm-hmm. The thing is the other thing that is really pointed about that question is that it will force you to watch, because you will watch it. You'll pay attention to it because you own something. If you don't do anything, then there's nothing for you to participate in, which means that you will look at nothing else. So you may look at you will look at other things, but you need to have some kind of skin in the game to understand what you are doing and how it can work. This is actually a great time, even for people with very small amounts of money, to take your first chance in the market if you've never been in it, and do something like I just said. It's not advice, it's just common sense. It's that, and you will watch it. I mean, for example, our mobile app is free. You can put $50 in and you can buy the shares for free. And then you will, if you want to, anytime you look at it, you'll see what the value of those 4 shares are. And I think by having some skin in the game, you'll pay a lot of attention and you'll actually learn how to play the game. The more you do it, the more you will understand the benefits of it. And it'll actually probably entice you to do it again.
Right. And the great thing about that too is that actually you're doing something, right? You feel that there's the doom and gloom, right? But whether this is listened to now or 10 years from now, you're going into motion. You put it into action. As you move into action, you start to feel you have a little bit more control of what's going on. Whether it's going up or down, you've done something. I mean, I love that because, right, you start with your $48 and it could be $160. For some people, that'd be a lot, and it's a great play. Just quickly before we continue on, then Kelly, I'll let you go. Randy, just give them, basically, they're going to give a text link for you guys for who want the app. We've gone ahead and cut a deal with them to go ahead and get it out to all of the Vertical Live audience. For those of you internationally, I don't know if the text will work, but go ahead and just private message me on Facebook or put it on the Facebook group and I'll get you guys a link for that too. So Randy, how do they get the app?
So yeah, if they just want to download the free app and like Kelly said, start playing with it, it's real simple. Just text the word mentor. I happen to like that word and it fits you guys. So
that's a great one.
Text the word mentor to this number, 480-418-0300. So the word is mentor, and and the number is 480-418-0300. And what'll happen is you'll get a text back with a download link to download the app. It will take you about 10 minutes to set it up, and you can, as Kelly said, start participating in the market with a very small amount of money. Just start playing. Just get into the game. And we didn't get to the last piece I was going to have Kelly talk about why we can look at this as a very tradable bottom, even though we might have made the all-time lows. Right now, the stocks that we're trading at $40, $50, $60, $80 are trading for 10, 20, 25, and these are great S&P 500 robust companies that aren't going anywhere. So I tend to think of them as being on sale.
I think that's a fair assessment. I think the bottom line is it's empowering to do something, and especially in a time like this. And let's face it, the markets always have recovered. This is not the end of the world. This isn't the end of the markets. If the markets are gone, I can tell you that there's going to be a far greater price that our society has to pay. And so obviously all the powers that be will prevent that from happening. The markets will resume. They will find order again, and there will be shakeouts and there will be losses. But on the other hand, it is wise, if there's ever a time to participate and empower yourself in any way, this is actually it. I mean, there is a fire sale on a lot of great American companies. Pick Disney at $100. I mean, these are great companies to buy when you get them on sale. And I can pretty much feel verified that in the years to come, you'll look back and you'll remember this moment. If you do end up buying something now and you say, you know, I wish I could have picked up more. That'll be the only complaint you'll have.
I'm actually making a note on this too. You know, it's the kind of thing too that I love that. It's always that inaction that, and this is a time a lot of people have frozen, but they haven't, because take a look at what's going on with the look at Zoom, right? How would you like to, I'd like to be on Zoom right now. Wait till they go public. So there's so much going on right now and so much movement that it creates a huge foundation for all of us to do this together. So, and there's questions obviously coming in from our international group about the app in Canada and other places. So I'll let you guys address that, because we have listeners all around the world, and then what your plan is.
Correct. Right now, the mobile app is only available in the US, and we are just finishing up our beta group in Australia. We will be rolling out new countries, chunk after chunk after chunk. But right now, that's the only place it's available. Now, if you happen to have, I don't know, Kelly will correct me, if you have a U.S. bank account and U.S. credit, can you trade in, does the app work for a Canadian that has a U.S. bank account, Kelly? If
the person is in Canada and they won't be able to download it on a Canadian-based IP addresses, and the way you fund your account is through an ACH. ACH is monies between American banks, which means that if you're in Canada, and by the way, for Canadians out there, we've tried everything. Your country is very difficult to be able to maneuver within the financial space. They only believe, it seems, that only Canadian advisors and Canadian broker-dealers are valuable, and the rest of the world be damned.
I joke about it. It was easier for us to set up accounts in Mongolia.
Yes, we could set up accounts in Hong Kong, Mongolia, and even to some extent parts of China. But Canada, our neighbor to the north.
Sorry.
Yeah, by the way, disclaimer from the Mentor Studio, if you're Canadian, we love you dearly, but you got to go call your representative. That would be really awesome.
Exactly what Michael said.
Yes, too bad.
Yeah. Move? I don't know, because but of course it's a great lifestyle in Canada, so we got nothing to say about that. And it's the kind of thing, though, but what you're teaching and what everybody has to realize is what you're teaching is worldwide, because it's still part of that mindset. What are you doing to get to that next level? Look, like if you look at a pandemic, and I can't wait to listen to this broadcast like a year from now to see where we're all at, right? But if you look at a pandemic, it's everywhere. So what are you doing to create that mindset to move forward? And again, a lot of you, oh, there we go. Stacy's great. See, you're a problem solver. She said, look at that, U.S. boyfriend, problem solved. So now we're going to create a dating app. That's a whole nother story. We'll talk about that soon. But, but it is really, and so here's the thing too, for anybody Canadian or anybody outside of the U.S., people in the U.S. So why don't you share this with them? Why don't you let them know how to get started so they can start? And then when you move here, I'm just kidding, everybody, you could do it on your own. But that's where it becomes shared economy. That's where we really look at abundance of, well, it's not about me, so I'm not interested. What about all the other people on the planet? And how are you willing to help them and really do this as one planet? So any last thoughts? I'll open this up for questions for a couple minutes, and then I'll let you two go. Any last thoughts?
No, like you've touched all over it, Michael. We're in a time where fear is driving behavior. And I just challenge everybody to change the way you're looking at the problem, change the way you're looking at the world. It's like the world's on fire, it's terrible, everything's dying. Well, we got some problems. There's a pandemic, there's no doubt. However, just put on a different pair of goggles, put on your opportunity goggles, put on your problem-solving goggles, put on a way in which you can go help more people recover faster. And when we start making decisions from a place of learning and a place of positivity and what's possible, instead of from a position of fear, the outcomes will be much greater.
I'll add one thing too.
Please do.
We all know that the market is driven by both fear and greed. And right now there's plenty of reasons to be afraid. But I can tell you that in my experience, those with courage will always displace fear. So right now, we're all locked in our homes, wherever we may be on lockdown. This is a great time to educate yourself about what kind of opportunities exist in this kind of an environment. And frankly, the market actually does offer them despite all the fear that comes from it. So have courage and do some research and get involved in it. This is the best time ever, really, to get involved in it. And I think anybody listening to this podcast in the years hence would agree with that.
And I love that too. And by the way, for anybody in this community, there's a couple of things. We are going to, Randy, check your schedule, because we do need to move it 1 hour, if you can, next time to 7 p.m. Pacific Standard Time. And so we're going to be on the 27th. And if you can make 7, you'll check your schedule. So we're going to do a follow-up. What was that?
What month?
This month.
Okay. I got to pull up my calendar. I don't have it all for me.
Don't worry about it. So I'll let you know. So we're going to do a secondary call, because this has actually been very informative. We're really going to get into mindset on how you guys move forward. If you have any fear, if you decided you want to jump in, how that looks. We're going to take a look again where the market is basically 4 weeks from now. And it'll be interesting to see, what it's done, the trends, and have you two really look at that. That'll be a great follow-up for this podcast too, because we're almost looking at trends at that point. And it's a short term, I understand, but for those of you who listen to the podcast, you're not seeing everything that's going on. And also for you listening to the podcast, we are going to have a formalized website that you all can live on in just 30 days or less, which means that you can start joining that. It's complimentary for you. You'll have a page you can be part of, and then you can join us in the bigger picture for really join the calls and not just listen to it, but be active with the mentors we have bringing on. I wanted to thank you two. I'm going to end the podcast part in a second, but you guys don't go anywhere yet. I wanted to thank you two for being on. For the Mentor Studio, it's another great information time. We have a lot more people coming on. We have a lot of mentors coming on. We just, of course, did the 2 calls with Steve Machette, who, as we know, produced Genesis, and Peter Gabriel and ELO, and his dad was the Stones producer. It was interesting to hear everything he had from his perspective. We're going to have another call, of course, with Randy and Kelly, and then we're going to move next month. We're going to really talk about mindset, and we're going to talk about LinkedIn and how to actually improve your profile on LinkedIn. We're going to work with a gentleman who's gone from basically 0 to almost 40,000, and at the same time has a podcast with over 700,000 downloads. So you're going to hear a lot about that. We're also going to be talking in the future to a gentleman, not too far in the future, who ran the AMC channel and also still has the longest running show on Hallmark to this day. And has produced and been a producer for most of his lifetime. I actually worked with Fred Silverman, was his VP. And there's a lot more coming to us for this year. Be social media, entertainment, YouTube stars, and finance and business. So it's mentoring, but it's all mindset. And you got to keep moving forward at that point. So from myself, from everybody at the Mentor Studio, thank you so much for being on this podcast. It's been great to have you all on. If you have any questions, of course, you can contact us, and I'll let you know how to do that more in the next couple of weeks. It's been a great day, a great environment, whether it's the morning, afternoon, evening. Thank you again for myself, Michael Silvers at the Mentor Studio. Randy and Kelly, you guys were awesome. All right, you guys take it away. Thank you very much. Goodbye, everyone.
Very much.
Okay, don't go anywhere yet. Team, that's the end of the podcast. Now, just for another 5 minutes, does anybody have any questions that they want to put on the board or go live? We'll just keep them 5 more minutes, and then we're going to let them go. Anybody, any questions? Anything come up? You don't have to make questions. Raise your hand if you do, or you can put yourself live. The other thing, too, let's give a big shout out. Christy Duvall's on the call tonight, and she signed up into the Mentor Studio, not only herself, but 3 members of her team today. So give that a round of applause. That's well done. Thank you. That's forward thinking. That's really, that's again, taking, I don't want it just for me, the mentoring, but I want it for my whole team, and just doing a great job. We're going to have Christy on a call too. She's going to tell you about what she does next week. And again, about bringing her whole team on. So that was just awesome. All right. Any questions, any typing? I'm just looking. There doesn't have to be. We know we don't force questions. And again, if anybody has any questions once listening to this, go ahead and post in the Facebook, and I'll make sure I get it to Randy so we can discuss that on the next call. Load up your questions and your fears if anything goes on and life is good. All right, we'll give it 30 seconds. If there's no questions, we'll all go at one time. Ron, go ahead.
Excuse me, but I read a book years ago that the forecast was that it was going to go up to 30,000, and I know it almost hit 30,000. Do you believe that now this is going to be the shot in the future at hitting over 30,000?
Obviously, the market 30,000 was for the Dow Jones, and if you think about it, Ron, it works like this. All indices that are built are designed to go higher. So the Dow, the NASDAQ, the S&P 500, although I might have used to say the Russell, but these are indices that are run by large corporations that have what they do is they kick out companies that no longer belong in them. So for example, Macy's just got kicked out of the S&P 500, I think today. So Macy's was a stalwart company for most of this nation's development prior to World War II until today. And so that goes away. Why? Because it doesn't add to the index. So the indices are going to always be designed to go higher. One day, hopefully in my lifetime, I'll see Dow 60,000. And that's not because I'm a raging bull or anything. It's just because of the design. The mathematical design is for indices to go higher.
Well, when I saw that 30,000, I think it was like around 6,000 or 7,000. I couldn't even imagine at that time, and it always stuck with me. And then we were so close to hitting that. That's why I wanted to know.
Yeah, that is a very good question. It's very reasonable, and it is hard to believe when you see it at 7,000 to think, oh my gosh, you think that could, more than go up more than four times. And it seems unreasonable because it moves so slowly. But as the market goes higher, it actually has the ability to go higher faster. So it's not unrealistic. And that's why, like I said just previously, the market will likely hit 60,000 at some time in the future. It's just the nature of the market.
I love that, though. It's the nature of the market, right? And it also, I have to be honest, everybody, I use their software and it's been brilliant because I don't have to think about it. And it takes care of me, which is great. I know, I didn't want to say that, but I watch it. I do watch it. I keep an eye on it. At the same time, it takes also it takes that fear out. Do you know what I'm saying? It's like, all right, I just know it's going to do what it needs to do. I know it's triggered to do what it needs to do. I saw it take basically all my money out of the market. I saw it put some back, which is nice to know too, because we're all busy and there's things we got to get done. And there's some things it's nice that it's just automatically doing what it needs to do. So thank you for that. Because I have to be honest, I had my money with somebody else, and Randy knows, but I won't mention any names. And when the market tanked last time, it tanked. And I'm still up. So this is just awesome. Thank you.
You're welcome.
Yep. All right. No further questions. We're going to let this go together. Ron, thank you so much for that last question. Kelly and Randy, thank you so much for being on. I'm going to open the lines. We're going to come up with one word. We're going to say 1, 2, 3. We're all going to let it go, and then we're all going to go away, and we're going to see Randy and Kelly on our next call. So I'm going to unmute everybody. Every noise is okay. What's the word for tonight? We're going to let it go with?
Canada.
Yeah, there you go. Oh, Stacy, let's give it to Canada. We're going to do 3. There we go. Oh, Canada. Okay, here we go.
We could use a phrase that should be kill the virus.
Yeah, there you go. That's right. Oh, yeah, I know. Kill the virus. I like that. Also, see, if we say Canada, kill the virus, now you guys got to get it happening. See? All right. We'll do Canada tonight, but we're going to think heal. Virus needs to go. Let's get this done. All right. On 3. 1, 2, 3. Canada. Virus. Time to go. All right. Talk to you all soon. Bye, everyone.
We're honored that you invested time with us today at the Mentor Studio. Now, don't be greedy. Share this knowledge bomb with all your dope peeps on Facebook, Instagram, and Snapchat. Actually, we'll even pay you to do it. To get the deets, please check out thementorstudio.com.